On our domestic commodities market update today, we'll turn our focus to Nigeria's sugar industry. According to the Economist Intelligence Unit, global sugar consumption grew by 1.4% between 2018 and 2019, and it's expected to fall by 2.5% in 2019 and 2020 due to consumers changing food habits and growing health awareness in emerging markets despite population growth and urbanization. Well, let's talk to Tobiloba Ogunpolu, a research analyst at the financial derivatives company, for more. Good afternoon, Tobiloba. Thanks for coming on the program.
Good afternoon.
So with the EIU's forecast now, are the trends in other emerging markets also affecting the demand for sugar in Nigeria? And of course, if that is what it is, what's the likely impact on the price of sugar here in Nigeria?
Okay, so despite the fact that we've seen rising population in emerging markets and also urbanization in emerging markets, we expect the consumption of sugar to decline, and that's due to the fact that there has been dietary shift from the consumption of sugar as a sweetener to other sweeteners such as honey. A lot of people consume honey nowadays, and so this due to the heightened awareness of the health implications of sugar, of the consumption of excess sugar in diet. We've seen that lots of people are already shifting from that commodity to other supplements of sugar. And due to this, we've seen that the consumption will reduce in 2020. And we've been seeing this to come in place in the price of the commodity. We've seen that the price of sugar has constantly been decreasing in the global market. And also, this trend has been coming into play in Nigeria. We've seen that lots of people are also getting aware of the fact that sugar has detrimental effect on the health of a lot of people. And also, but the interesting thing is that we've seen that due to the fact that there has been decline in the price of sugar in the global market, in the domestic market in Nigeria, we've seen that the price of sugar has been increasing, and that's due to the protectionist stance of the federal government. Due to the border closure, we've seen that a lot of people are now buying sugar from domestic producers, such as Dangote, such as Flour Mills Nigeria. So the fact that a lot of people are buying from this domestic producers, we've seen that the price of sugar in Nigeria has been increasing, while on the global part, prices have been declining.
We're still coming back to the issue of the border closure in just a moment. But in spite of the fact that you say that, yes, we're shifting attention from sugar, demand for sugar is declining, but Nigeria is still the largest importer of sugar in sub-Saharan Africa. How does this resonate with the self-sufficiency goal of the present administration?
Yes, Nigeria is still the largest importer of sugar, but we've seen that it's a fact that there has been long-term investment plans in Nigeria in the aim of being self-sufficient. And due to this, we've seen that the government have been trying to improve domestic production. And we've also seen that this has reflected in the fact that the border has been closed. And we've seen that this has helped domestic producers. We've also seen that this has reduced the demand for global commodities such as global sugar commodity, because the border has been closed. So due to this, we've seen that the demand for global commodities has reduced, and therefore we've seen the increase in the demand for domestic commodities. So the federal government have been trying. Due to this, this has really helped the performance of companies, like I said before, the performance of top producers of this commodity.
Now, let's talk about the leading producers of sugar in the world. Of course, Brazil, India and China. Of course, China remains the key consumer of sugar. But with the outbreak of this coronavirus and the projected decline in China's growth, will that be an impact on the demand, supply and the price of sugar this year in 2020?
Okay, well, we all know that the coronavirus has really had a negative impact on global commodities. So just yesterday, the price of crude declined below $30 billion. And also the price of sugar has also declined to a 10-month low. So all this point out to the fact that there has been reduced investor sentiment. So the investors are really not purchasing this commodity due to the fact that people are talking about global recession and all that. So all this has come into play. So the fact that all this are happening, the demand for the commodity has reduced due to coronavirus. China is the largest consumer of this commodity, and the fact that we've seen that there has been reduced demand from China, that has played into the price. There's still supply glut due to the increased production from Brazil and increased production from India too. So all this has played into the price of this commodity. In the global market, we've seen that the prices have been declining steadily.
So how can Nigeria take advantage of this gap?
Okay, so looking at taking advantage of this gap, the first thing is we're trying to be self-sufficient. So in the aim of being self-sufficient, the plan is to increase our own domestic production. So we don't want to look at taking advantage of lower prices. If we're taking advantage of lower prices, that means we're planning to import this commodity into the country. So the fact that we're not planning to do that and we're looking at being self-sufficient, the aim is to improve on domestic production of sugar cane, improve on domestic production of sugar in Nigeria so that we would remain self-sufficient.
We hope to see that we achieve all that. Tobiloba Ogupolu, research analyst at the Financial Derivatives Company. Thanks for coming on the program.
Thank you for having me.
Of course, the fear of coronavirus has continued to lead to a historic drop in U.S. stocks, but shut borders and disrupted daily life around the world as governments took increasingly drastic measures to try to reduce the severity of the global outbreak. But financial markets had their worst day in 30 years, despite emergency action by global central banks to try to prevent a recession, with U.S. stock markets falling 12% to 13%, wiping out trillions of dollars in market value. In the U.S. now, President Donald Trump urged Americans to halt most social activities for 15 days and not congregate in groups larger than 10 people in a newly aggressive effort to reduce the spread of the coronavirus. EU finance ministers are planning a coordinated economic response to the virus, which the European Commission says could push the European Union into recession. The Middle East business and travel hub of Dubai says it's closing all bars and lounges until the end of March, while Thailand plans to close schools, bars, movie theaters, and popular cockfighting arenas. Meanwhile, the International Monetary Fund lists fiscal, monetary policy, and regulatory response as 3 action areas to help guide countries in the difficult days ahead. According to the fund, additional fiscal stimulus is necessary to prevent long-lasting economic damage. The fund says central banks should continue to support demand and boost confidence by easing financial conditions and ensuring the flow of credit to the real economy. Financial system supervisors have been advised to maintain the balance between preserving financial stability, maintaining banking system soundness, and sustaining economic activity. And in Egypt, the central bank slashed its main interest rates by 300 basis points at an unscheduled meeting on Monday, saying it was making preemptive move to support the economy in the face of the COVID-19 outbreak. The bank's Monetary Policy Committee cut the overnight lending rate to 10.25% from 13.25% and the overnight deposit rate to 9.25%. from 12.25%, and that is the lowest rate since early 2016. The Central Bank's Monetary Policy Committee was to meet on April the 2nd to set interest rates. Egypt, which has confirmed 150 cases of coronavirus and 3 deaths, has halted all air traffic at its airports from March the 19th to the 31st. Of course, the impact of COVID-19 continues to be felt across board, especially the markets. And at the crude oil segment now, it rose more than $1 earlier today as bargain hunters emerged after recent shopping falls due to the virus pandemic and the price war between Saudi Arabia and Russia. But fears of a recession still dragged on the market. Brent crude was up 1.8% to $30.60 a barrel, while U.S. West Texas Intermediate crude rose 3.7% to $29.76 a barrel. The United States has said it will take advantage of low oil prices to fill its strategic petroleum reserve. Other countries and companies are planning similar measures to fill storage tanks.